Okay, so in terms of finance modules, so when we talk about P2P flow, so in terms of finance, we'll talk more of an payable part, and if we are talking about O2C, so we will talk more of an AR. Okay, so now the process firstly for AP starts from the procurement module. What are the transactions basically that we will do? This I'll explain, and then probably I'll explain the business process how they will do realistically. Okay. So firstly, there will be an requisition. So what is requisition? So requisition is nothing but requesting for some item. It could be one or two or in a batch. Okay. So now let's say I wanted to have computers for the new journalists, so which I don't have it in the stock. So or probably this item which we have it in the stock is not working properly. We wanted to place an order for this 10 computers, let's say Dell laptop that we are trying to purchase. So what usually it will happen is that so there will be multiple departments. Let's say this particular resources are joining in finance department. So finance will request for 10 laptops. Okay. So this request will go to the procurement team. Okay. So procurement team, what they will do is that so again here you will have the approval and all those activities. Because and one more thing, requisition is the internal document, and when we talk about the purchase order or the PO, so that is more of an external document. Okay, so that is why this is handled by multiple departments, and when we talk about purchase order, it is more of an procurement team that will handle those sort of transactions. So now this will go for an approval. So this could be a multi-layer approval. So it could be within the department or it could be across the department. Okay. So now, based on this, so there will be a purchase order that will be created because this will be reviewed by the procurement team as well. So they will review and they will say, yes, we can approve this 10 lakh talks. Okay. And then this will be an procurement order or the purchase order. So this will be raised by procurement team. Okay. So now they could say that we do not have budget for 10 laptops. We could probably manage it for 8 laptops, or let's say they approve all 10 laptops to be purchased. Okay. So now again here we will have the approvals that could be within the department and across the department because it's not that procurement team is taking action here. It is requested by finance department and this is being raised by procurement team. So they might get concurrence from the finance managers. Okay, it's not from who raised this request. It is from the specific department's manager. Okay, so this is again comes under the approval. Once this is approved, so then what will happen? So I will have item received on a specific date. So it's not that I'll go and immediately collect the laptop. So it's just that I will create the code, meaning that I will raise quotation with multiple vendors and then I'll analyze if party one is giving with better price and the better options, or party two is giving better options. Okay. So upon that, I'll finalize my purchase order and my shipment could be, let's say today it is 23rd of February and shipment would be on 25th of February and I will receive the product on, let's say, 27th of February. So now, 27th of February, I'm receiving this. So this will be received by inventory. So there will be a specific department. It could be warehouse or it could be inventory. So based on the organization structure, because if we are talking about the manufacturing, so even at the manufacturing plants, we might require laptop because we might want to record the production or the production capacity and then the planning other activities. So there you might need the laptops if it is there. So it could be warehouse. If it is in head office or the operational office, so wherein you will say this as an inventory. So from inventory, you will basically transfer the item to the respective departments. Okay, or it could go to first the procurement, and procurement might handle this to finance department. Okay, so now what inventory team will do? So they will basically create the receipt. Okay, so now they are creating the receipt for the 10 laptops. So here there could be two possibilities. So one is that probably they might have received as it is and they are transferring it. There could be a possibility that this could have happened as in two shipment because shipment one, let's say 5 laptops. So that could be the agreement. The 5 laptops and the shipment to let's say March 3rd or March 4th. So we are receiving the second shipment. So that could contain another 5 laptops. Okay, so in that case, what I will do is that so ordered quantity is 10, but then receipt quantity is 5. So balance are the remaining 5 quantities. So I'll receive it at later point of time. Okay, so this is the receipt or the receiving part. Okay, but the receipt and receiving are two different activities in terms of inventory.
Wait,
So,
एक minute.
and
I have to
yeah,
ask something. Still here. Okay. That PO will get receipt. You said two parts. Five will get or five will reject. Right.
correct. No, no, not reject. They will receive it at later point. They there could be possibility rejection, but then that is different transaction. That is kind of unwritten where we will raise the credit limit.
That will be through inspection. Now they will inspect first. If they are not qualified, then they will reject. Something like that happen. Now.
Inspection usually you will not have it for the laptops and these things. So where you will have inspection is that if you are implementing this for a manufacturing unit. So let's say there is a manufacturing unit called Teams, wherein they manufacture pipes and the other products. So now, if you want to receive a particular item, so there will be a proper Q&A team where they will do the inspection. So if something goes wrong there, or the quality check is negative, so they might return the product. So in that case, you will have the inspection, and that could possibly go as a return transaction.
Okay. Okay. So here we are taking only five, and five. What happened to
Mm.
five other five?
Otherwise, we will receive as a second shipment. So
Oh,
this,
installment it is
yeah,
coming. Okay.
no, not we can say, but not exactly installment. So it is kind of a two shipment or three shipment process that they might do as a scenario I'm saying. So I will create two receipt in that case. So receipt one will have 5 laptops and this will have another 5 laptops. So billing for this will be separate. So for first batch, I'll say invoice it for 5 quantity and invoice similarly for the second receipt, I will invoice it separately. So it is not exactly the installment. We are deferring the receipt as the receiving process.
Okay.
Okay. Any
Yeah.
other question?
Till now. Okay.
Okay. So we are receiving the receipt. Okay. So now we have created the receipt. So as I said, so there could be two activity. So one is that receipt. So receipt is nothing but the process of creating the receipt saying that I received so and so quantity because this is the place where the accrual will be created. So now what is accrual? Accrual meaning I'm liable to pay to this particular supplier because I received this product in so and so quantities. So upon receipt, it will create the accrual. Okay, so once I invoice it, so this accrual will be knocked off and then the liability will be open. So this I'll explain when I explain the accounting entries. Okay. So now I have the delivery. So delivery is nothing but it's the physical movement of goods from supplier to our inventory. So that is what we are referring to the delivery. So these are the aspects of inventory. Okay. So just to understand, I'm explaining there are two-step process there. So one is receipt and the delivery. Again, here there could be an option wherein I will not have the process of delivery itself. I will create only the receipt, but I don't need to show this as an delivery. Okay. So in the same scenario, let's take the laptop. So laptop, I'm just receiving the item and I'm marking this as delivered. But in case of raw materials, there are certain products like soaps and the other things, wherein I use the soaps for the other manufacturing process. Wherein I don't need a QA team to verify and validate it, but then I will need this delivery process. So in that case, I can use this option of delivering the item to the inventory. Okay. But then for laptop, it is not usually delivered. It is just the receipt is created. Okay. Okay. So once this items are uh, delivered and receipt is created, so then we will have the invoicing process. Of course, we have received the item, so we will have to pay to the vendor. So if at all I want to pay to the vendor, in terms of Oracle application or the structure, I will need invoice to initiate the payment. So without invoice, I will not be able to pay to the vendor. Okay. So in AP module. So now once the invoice is done, so we will have certain due dates. It could be 30 days or it could be 45 days, whatever the terms that we have with the vendor. So we will have to make the payment. So now the payment could be multiple payments are there. So one could be single payment or the other could be batch payment. So single payment meaning on priority basis, if I want to pay to this particular vendor, so we have option to select the vendor and then pay invoices of that particular vendor only. The other option is that the batch payment, wherein it is not specific to the vendor, so we have certain criteria we can filter out by operating unit or the business unit, and then we have option to filter by, let's say, currency and then legal entity and the other options as well, like pay group and the supplier type, all those options are there. So based on which I can filter and I can process the payments in batch instead of processing one by one. So usually it is the batch process that we will do. So single payment is as an option we have because if we wanted to process the a payment on priority, or let's say due to some technical issue, I'm not able to process the payment, but then I wanted to process it immediately. So I have paid out of my net banking as a manual thing, but then I will have to record this in my system as well. So what I can do is that I can say this is manual payment. So in case of manual payment, system will not take this process to bank because when we talk about the payment processing, so it will happen something like this. So I will create payment here in Oracle. So this will generate a file. So this file will be sent to bank and bank is going to clear the payment and we will receive the statement. So this statement is what we will reconcile with the system transaction. Okay. So this would be the typical P2P process, which means that procurement to payment. Okay. So where the process starts with procurement and this ends with the payable module. So then finally, we will have the accounting process. So what are the transactions that we will account? So requisition and purchase order, we will not be able to account it because one is that internal document and this purchase order, it's the same information that we are getting here. Additionally, we will not have costing and the other parts involved. So we will not account these two transactions, but then starting from receipt, invoice, payment, and then the bank statement reconciliation. So these are the transactions that we will do accounting. So accounting meaning whatever transaction that we have entered. So these transactions we will send it to GL module. So why do we do this? Because when we talk about subledger that is payable or receivable, so we have certain structure in terms of capturing the information. But when we talk about the GL, so we have other forms of capturing the information. So now, if you relate it with the chart of accounts that we saw from the previous sessions, okay, that probably you can understand. So this. So now, let's say I wanted to capture one supplier invoice. So now, what are the information that I will capture here in AP module? So I will have supplier, I will have invoice number. Invoice number, of course, we will receive it from the supplier. So that's a free text that we will enter. And then we will have the invoice date, invoice amount, and then the tax, other information are there. Okay. So now these are the information that we are recording in payable module. So now when it comes to GL, we will not have these details. What we will have, so we will have the account code combination, and then we will have what is coming on my debit and what is coming on my credit. So this would be my accounting information. So now when we are preparing the financial statement, so we are not going to use this. So this is for the purpose of detailed information, but then when we are preparing financial statement, we will not go with this detailed statement. So instead we will go by account or the account code combination. Okay, so this will tell me what is my balance at that particular point in time. Okay, so now to see the accounting entries in the system. So basically, I'll have a certain process in terms. So again, the accounting entry could be manual or the accounting entry could be system generated. Okay. So now when we say it is system generated, so it could be basically the batch process which we can automate. Okay. So if we don't want to automate, or probably in an other scenario, if we wanted to basically create it manually, I can open a specific invoice and I can say create accounting, wherein I have two options. One is I can say this is in draft. So now why do we do this draft accounting process? So it's just to verify whether the GL accounts are properly populating, because it's not that all the accounts that we have set up all are correct are in place. So as a sanity check, so we will do these draft accounting process, because we will not be able to account it in GL, or we'll not be able to push the transaction to GL, because we might have the scenario of handing over the system to the users, so that we call it as UAT phase. Okay. So then we will not do the post to GL. Instead, just to check, we will run it in the draft status. Okay. So that's the difference between draft and posting to GL. Okay. So now P2P accounting entries starts from receiving, as I said. Okay. So when we first create the receiving transaction in the system, so what we will have is that, so we will have basically the receiving account or receiving inventory, we can say. Okay. And then we will have the accrual account. So later I'll explain. So from where we are pulling these accounts. Okay. So I'll just put this as debit and credit. Okay, so this would be my debit and this would be credit. Okay, so this would be my first journal entry that system will generate. So as I said, so when we create the receipt, so the accrual entry will open. Okay, and then when we invoice it, so this will be closed. So I also explained that there could be a possibility that we could have probably the delivery process also. So if we are having the delivery process, so what we will have is that we will have the inventory account. So inventory meaning our material account. So let's say I'm purchasing, let's say milk. So I'm in the process of manufacturing chocolates. So I'll have milk as one of the raw material. Okay, so now for this milk, I'll have specific material account. So this material account is what we are referring to the raw material. Okay, so now this would be my debit item. Okay, and then I will have my receiving inventory account on the credit side. Okay, so this would be my second transaction. So let's say this is receipt and this is delivery. So here we will have the different types of purchases. It could be asset purchase as well. So that is not a big thing to deal. So probably I'll explain this flow and then I'll come back to that. Okay. So now once this is done, so we will do the invoice. So for invoice, as I said, once you create the invoice, so this accrual will be knocked off. So accrual will be my debit item, and then, as I said, the liability will be opened. So liability will be on the credit side. Once this is done, I will have to make the payment. When I'm making the payment, so the liability account will be knocked off, and then the cash clearing. Cash clearing will be on the credit side. So now why are we talking about cash clearing? So even though we are making this payment through bank, so usually it is the basic term that we will use, that is cash clearing, because cash is going out of the business. So that's the typical accounting term that we will use. But you can call this as in bank clearing as well. Okay, so now we talked also about the reconciliation. So when I do the reconciliation, so I will have debit as the cash clearing account, and then the cash account will hit on the credit. So here if you see, so there are a lot of temporary accounts. So what are the temporary accounts? So this is my temporary account, and this is my permanent account. So this is my temporary account, and this is my temporary account. This and this also my temporary account. So why do we call this as temporary accounts or temporary account or the contra account? Because these are not the permanent accounts which will stay as it is. Because here if you see, so I'm saying this is my material account. So let's call it as 10,000 rupees. So now this is not going to change or this is not going to get nullified. But whereas the receiving account or the accrual account, so if I perform a specific transaction, so this will be knocked off. For instance, if you take this, so I am creating this receipt transaction. So receiving inventory will be opened up. And when I create the delivery, so this will be knocked up. Similarly, so this accrual will be opened. And when I create the invoice, so this will be knocked off. So similarly, the liability account and the cash clearing account. So these are the temporary accounts that you will have. So why are we using these temporary accounts? It is because for the reconciliation process or to have the better synchronization between the modules and between GL and the subledger modules. Okay, because let's say I have created 10 transaction, which means that I have received 10 orders that I have booked, but then I have invoiced only 8. I did not invoice it for all 10 orders that I have booked or received. So now, if I take my accrual account, if I just pull this accrual account, so I will be able to understand that at subledger level, I have 10 orders that is received. But then if I look at my account level balances, I will be able to say that I did not receive because this has basically the credit balances more than the debit balance. So which means that I did not invoice for the two orders that I have booked and received. So for this purpose, we are having the temporary accounts. So it could be for the receiving, or it could be for the payment, or it could be for the reconciliation. Okay. So that is the purpose of having the temporary accounts. So now, if you see the actual accounting entry, it is the material account to the cash account. If I'm creating this particular transaction in GL, so I will not use all these temporary accounts. I will directly say it is material account debit and cash account credit. But when we talk about the P2P process, we will see in detail that we will have these many temporary accounts and the transactions involved. Okay. So this is one part of it. So now, as I explained, so here there are three options that you could do. So one is that so this is basically based on the nature of purchase that you are doing. So let's
Yeah,
say I am doing, yeah,
before that, that cash clearing and cash two will be different accounts.
yeah, cash clearing and cash accounts are two different accounts.
Why it is that? Like, what is the use of both?
That's what I'm saying. So cash clearing is a temporary account because similar to the liability, so I have issued the payment to the bank. So
Okay.
now there could be a possibility that this payment did not pass in the bank, or probably due to some exception. It could be incorrect uh, IFSC number, or it could be some service issue, or it could be invalid bank account details that supplier has given. So it could be various issues. So there might be failure that has happened there. But then if I am not using this cash clearing account, so instead if I'm doing cash account directly, so which means that this transaction is clear, which means that I have issued payment to the party, but actually it is not cleared yet. So to track this particular failed transaction, we are using the cash clearing account.
Okay, and then after clearing that, we will do from actual cash account payment through payment.
Correct, correct.
Okay, got it. Yes.
Because we are getting statement from the bank, and bank says that I have cleared this particular payment that was issued on, let's say, 21st of February. So now, basis that statement, we will say that yes, this transaction is cleared. So this cash clearing line will be knocked off and cash account will credit.
Okay, got it.
Okay.
Thank you.
Okay. So here, so you will have basically different natures of purchases. So it could be the material transaction. So material transaction is the example that we saw. Okay. So apart from that, we also could have the asset purchase or it could be the expense purchase. So, so what do we call the asset purchase? So let's say I am purchasing furniture. So this furniture is part of my branch B. So this branch B is going to use this particular furniture. So this I will consider this as an asset because using this furniture, I'm not going to process anything and then doing or I'm not going to sell this particular item. Okay, so now this becomes my asset, the furniture that I'm purchasing. So this is my one of the transaction that I will do. So now in this case, what will happen is that so instead of having this as a material account, so what I will have is that so I'll have asset clearing account. So again, why we are having clearing account here? Because when I create asset in the asset module, so my cash clearing account will be credited. So this cash clearing account, let me just put it here. So here it would be asset clearing account debit and receiving inventory. So it's the same option that we'll have, receiving inventory. Okay. So now, so this is for the invoicing and the other processes. So now I'm creating the asset in the fixed asset module. So here what I will have is that I will say this is my asset account debit and clearing account credit. So it's similar to this option wherein this account will be knocked off at the particular transaction. So this is at the creation of the asset. So this account will be knocked off. So this is for the asset transaction that we are doing. So similarly, for the expenses, so we will have the expense account that is recorded here. Okay. So let's say expense, I can call it as let's say some stationery purchase or probably we are paying the electricity bill. So it's not the usual case, but in a rare case, if a company wants to track all the purchases from the purchase order module, so we might want to create the purchase order even for the electricity. Okay, so in that case, so this will be classified or categorized as expense item because we will not be able to create this as an inventory because this is not actual material. Similarly, we will not be able to book this as asset because we are not going to use it because we have already consumed and we are trying to pay for the consumption that we have made. So this will be expense. So in that case, I'll have let's say electricity charges. Okay, so this is how basically we will define. And then here we will have multiple options in terms of selecting the invoice. So we have two-way, we have three-way, and we have four-way. Meaning, when I'm creating this invoice, so what are the documents that I might want to look at in terms of creating this? So why do we need this particular in first place is that if I want to validate this particular transaction against what I can validate this. If it is two-way, so I will validate against PO. If it is three-way, I will validate against three-way. Receipt. If it is four-way, I will validate against instruction, which means I am not only validating against the receipt. So in this case, what will happen? I will validate invoice and purchase order document. Whether the invoice quantity and the purchase order quantity are same and the prices are same, all those information. So similarly, if I'm doing three-way, I'll compare invoice with PO and receipt. Similarly here, PO, receipt and inspection. Okay. So these are the options that we have in terms of invoicing. Okay. Now, where are we getting these accounts? So when we talk about this, okay, let me come from here. Okay, so this is from the bank account because if I want to make payment, so I might have probably Axis Bank and HDFC Bank. Okay, okay, HDFC Bank. So some cases I might use Axis Bank, some cases I might use HDFC Bank. Okay, so I will have to select. So now for Axis, let's say I call this as clearing account and I call this as cash account. When it comes to HDFC, I call this as my clearing account and this as my cash account. So now you will have different cash accounts. So one for Axis Bank and the other one for HDFC. Similarly, clearing, again, it is best practice to use two different clearing accounts instead of having one account. But then it's not mandatory. You could have one account also for clearing. But then here we will need two different cash accounts because if we are not doing this as a configuration, what will happen is that you might probably want to create a custom report and pull those information. So for that reason, we will have probably multiple this thing created, multiple accounts created. Okay. So again, the purpose of this is that if I want to probably look at the balances, it could have the debit balance, it could have credit balances. Okay, because this is nothing but the payment account. So there are two accounts that usually company maintains. One is collection account, then the other one is payment account. So if I want balance in my payment account, so probably I might want to have it from the. So let's say this is from again I have another HDFC account. So this is my collection account. So collection account will transfer amount to Axis or the HDFC bank. Okay. So let's say in this case, I'm using Axis Bank. So I will have this account created. So this account is stored at the bank account level. So both the clearing and the cash accounts. And then we have the liability account. So liability account is usually from the supplier side. If it is not from the supplier side, so it is from the supplier profile. So it is not there. It is at the invoicing option. So these are the three different options that we can store the liability account. So now, as a priority, it will first look for the supply side. Okay, if it is not there, it is going to look at the profile or the invoicing options. But then invoicing options, it is mandatory to provide the liability account. Okay, and then if you see, so these are the additional accounts. This will be created by the procurement or the inventory team. So now what they will do is that, so they will basically create these accounts using the rules. So let's say they have a rule wherein if the item category is, let's say, material, I want to generate, let's say, 1230. If it is asset, I want to generate 1231. So similarly for the expense also, you can have two different accounts. So this item category is the criteria to generate these accounts. So this is referred as mapping set. We call this as mapping set. So using this mapping set, we are basically defining a condition, and based on the condition, we are generating these accounts. So this accrual, receiving, material accounts, so these are generated or created by the procurement or the inventory team, basically the supply chain site configuration. But we we'll have to have certain idea so how this is basically created or what is the process in terms of uh, creating the receipt till making the actual payment to the vendor. Okay, so for which this is the flow. So this is what we are talking about, the P2P or the procurement to payment. So that's why I said when we talk about finance, it is mostly the payable or the accounts payable model that we will talk more in terms of this thing. Okay, because the invoicing payment and all those things happens here, and only the reconciliation happens at the cash management model. Okay, so other models we have covered, I think. So this is inventory, this is procurement, and this also by the procurement. Okay. Any question till now? Okay. Probably I'll move to this one. OTC. Okay.
Yeah.
So now this is one part of the transaction. This is one side of the transaction, that is payment. Before this, so we will also do the sales. So similar to this, we will more talk in terms of receivable model. Okay. But then this involves the supply chain module also. So we'll have the inventory and then we'll have the order management. So similarly, how we have the procurement, so we will have the order management module involved here. Okay. So now the process starts here. So again, here there could be two possible scenarios. So one is that company might decide that they wanted to manufacture the item based on the analysis or the future or the previous transaction that customer has made. So probably I might assume that I will require 10,000 quantities of so and so product. So I will do manufacture on periodical basis. So I'll have my lots and serialization, all those things. So now when the order comes, I'll do the shipment directly. So this is one type of process that we might follow. The other type of process which we might follow is that. So what I will do is that, so I will not basically manufacture the item until I receive the order, because there are certain cases where I might not manufacture enough, or I might manufacture more than what is needed. So there are wastages or there are issues there. So for that reason, so when I receive the order, so that is when I will initiate the manufacturing process, and I'll say the lead days is, let's say 15 days or 20 days, whatever the day that I want to mention, I'll give it. Okay, so now let's see that the manufacturing process is completed and I have item ready. So in this case, what I will do is that, so firstly, I will book the sales order. So when I say sales order, so this is similar to the PO, purchase order. So here it is sales order. So what are the information that we will capture here? So we will capture the item, we will capture the customer, we'll capture the pricing, and then we'll capture the discounts if we have any such. We will capture those information, and then we'll check for the item quantity or inventory, and we will book the order. Okay. So now let's say I am selling chocolates, let's say. So let's say I am selling in the quantities of 1,000 units I'm selling. Okay. So now the sales order is booked. As I said, based on the order, I will initiate the manufacturing process. So now the manufacturing process is completed. So what I will do is that I'll do release. So now what is pick release? So I have 1,000 quantities in my inventory. Okay, which I might want to pick it and move it to the location where I can send this shipment to the particular customer. Okay. So picking this process or arranging things in order to make the shipment. So this is what we are calling as pick release. Okay. So I'm doing pick slip generation. So fixed slip generation is nothing but it will details out the quantities that we are doing. So let's say in this case, chocolate in 1,000 quantities. This will also have the lot number. This will also will have the expiry date and then other information also. Okay, so this is what we'll have inside this fixed slip. Okay, so fixed release is the process wherein we are moving this particular item for the shipment. Okay, so now this process is completed. The fixed release process is completed. So the third step that we will do is the shipment. So we will load the items. It could be a truck or it could be a small vehicle that we will use. Okay. So we will load the items into the vehicle. So once this process is completed, so we will have to generate the invoice because it's similar to the Amazon purchase that you are doing. So when you receive your parcel or the ordered item, so you will receive also the invoice along with it. Now, similarly here, so we will have to create the invoice. So for 1,000 quantities, I'll have to create the invoice. Okay. So now till this point, I wanted to have this as one switch because I'll do the pick slip. So I'll receive the order. So once the manufacturing is done, I'll do pick release immediately. And immediately I'll prepare for the shipment and also I'll create the invoice and I'll print this invoice and attach it or tag this with the shipment. Okay, the box, whatever that we have. So I'll just attach it there. Okay, so because this is the reference that customer has to pay me, let's say uh, this is 100 rupees that pack. So now this becomes my 1 lakh. So this 1 lakh that I will receive from customer on the basis of the invoice that I'm sending to this particular order. Okay. So now I have invoiced it. So it's not always that the moment I send the invoice, I'll receive the payment. So mostly it is on 30 days limit or 30 net, or it could be 45 net, or it could be 15 days, or it could be 7 days, whatever the contractual terms that we have with the customer. So we will set this term. Okay. So this basically we can set it at the customer level. Okay. So now let's say this 30-day has arrived. So this is the maturity date. So I will receive the amount from customer. So what I will do is that I will create receipt for the 1,000 quantities. So that is 1 lakh rupees. Okay. So the receipt here it is different purpose and the receipt here that we are creating is for the different purpose. Okay. So now I have received the amount. Okay. So here again, we will have the reconciliation. So now here we understand that we are sending the payment. We wanted to make sure that the payment is received. So similarly, here the reason why we will have the option to reconcile is that I might receive this in cash, I might receive this in check or DD or NEFT or any other forms of wire transfer. Okay. So now I basically wanted to make sure that this transaction, what we are talking about, this is matched exactly with my bank statement. So in case of cash, I don't need this because cash is that I just received and this is realized. So realized meaning the moment you receive in your hand. So that is the realization process. So since it is cash transaction, I have already received it and I have realized it. So in this case, I will not need the reconciliation or I can directly say cash, cash debited. Okay. So now in case of checks, what will happen is that so I will basically receive the check from customer. So let's say I have branch A and branch B. So branch B is receiving this check. Okay. So now this will be transferred to head office. So a person from head office will go to bank and will do the deposit and the other processes. And bank will basically record the transaction, the inward transaction. Okay, now we have received this amount in our head office. So this is the moment that we will basically receive the statement. So now the statement will say that on this particular account, so we have received the so and so amount, that is 1 lakh rupees. So now again, what we will do is that we will do the reconciliation with the bank statement. So that is for 1 lakh. So now we have received, and with this cycle ends basically. So similarly, we will have the accounting of the receipt, reconciliation, invoice, and the shipment, and the other process as well. So now this sales order will be created in order management. So similarly, the pick release and the shipment will happen in order management. So in some cases, this might happen in the inventory because the ship release and the shipment might happen in the inventory also. So then we have the invoicing. So this is in the AR module. So this and the receipt. So this will always happen in the cash management module. Okay. So this is again from the AR module. So we will do the accounting and then this will be transferred. If it is for the invoicing and receipt transaction. If it is for order management, so we will run the source module as order management. Okay. So this is the flow of transaction. Okay. So similar to the P2P cycle, we will not have basically uh, the accounting entry generated for the sales order because sales order is just the high level information that we are capturing from the customer order. Okay. So here we will not have this created. So it will start from the shipment. So when I create the shipment, sorry, we will have this from the quick release. Okay. So now when I basically do the quick release, so what will happen is that so I will have my material account, or I'll just put it here. Okay. So let's say, okay. So when I'm creating sales order, as I said, no accounting. Okay. But then when I create what do you call the pick release. So what I will do is that basically I will credit the material transaction. Sorry, it is credit. I'll credit the material transaction. Okay. And then I will basically debit the inventory account or the receiving inventory. I'll just okay, so my debit would be receiving inventory account and credit would be my material account in case of pick release transaction. Okay. But if it is shipping transaction, so here we will have something called COGS or the cost of goods sold. So this account will be on the debit side. Okay. And then I'll have my receiving inventory accounts on the credit side. Okay, so this is for the shipment transaction. So once this item is shipped, I might want to create the invoice. So now for the invoice, I'll have debit as the receivables account, similar to the P2P flow where we had the liability account. So here liability account or the other ways we can call that as payable account. So similarly, here you will have the receivable account on the debit and credit would be revenue account. Okay, so here again you have multiple options. So I'll just explain that at a later point in time. Okay. So now we have invoiced it, which means that we have created the receivable. So customer has to pay as so and so amount. In this case, let's say it is 1 lakh rupees. We say 1 lakh rupees that we are talking about. Okay. So now when I create the receipt, so I'm going to say either this is cash clearing Okay. Or if I'm receiving in cash, the physical cash, I can directly say it is cash. So in this case, I'm assuming this is a check payment that I have received. Okay, so I say this is cash clearing, and then my receivable account will be credited. Similarly, for the reconciliation, I will have uh, cash account on the debit and cash clearing on the credit side. Okay, so this is the flow of accounting entries for the O2C flow. But then here you have other options as well, because this we are talking about in terms of generating the revenue upfront, meaning that I will not have uh, option of basically doing the service at later point in time or collecting in advance, all those things, because there are certain business processes that collects in advance. So let's take example as Netflix. Okay, so in case of Netflix, so what will happen? So I am paying the premium, uh, premium or whatever the plan that you have taken. So let's say I have taken the plan. Okay. So now I am using this for 12 months. I'm using this for 12 months and I'm going to use this for the entire year. Okay. So let's say because when I take this plan as annual, so I'm getting some discount. So I'm going for annual this thing. So now in this case, if you see, it is not that I'm going to record the revenue for, let's say I am receiving this in the month of February. So this customer has paid me in the month of February. So I cannot directly book this 999 in the month of February. Why I cannot book this as February month? Because this service that I'm providing, I'm not giving it only for February month. I'm going to give this service for the entire 12 months. So I cannot book only for the February month. So what I will do? So I will say that this is deferred revenue. Okay. Or let's call it as unearned revenue. Okay. So now in this case, if you see, so we have this accounting entry that system will generate. But in case of this scenario, so directly the revenue will not be generated. So in this case, it is going to be receivable to unearned revenue. Okay. So now, when will I recognize this? Month on month, I will recognize, which means so till next January 2026, I'm going to recognize this particular amount. Okay. So when I do the recognition, so this is for the February month. So February, let's say I'm recognizing my first period. So what would be my accounting entry? It would be unearned revenue to the revenue. So similarly, the second and third, whatever the periods count that we have, so we will have the unearned revenue to revenue. So we will recognize and we will record the revenue. Okay. So this is one of the options that we have inside this. Okay. So in this case, we will also have the deferred costs because this we are talking about in terms of collecting the advance. So similarly, if we are basically providing the service after the entire amount is collected, so we will also have the deferred costs generated in the system. Okay. So similarly, upon recognition, so instead of costs directly booking in the system, so we will have the deferred costs. And when we recognize it, so we will have similar to this. You'll have the deferred costs on the debit and costs on the credit. Okay. So this is how basically the accounting entry or the flow of accounting for the O2C module will look like. Okay. Any question till this point?
Yeah, only about that receipt part, like where in P2P we will receive the payment, right?
Yeah, correct.
Or here in O2C, we will pay.
Yeah. No, no.
We
O2C
will
is what?
receive, and here we will pay. P2P, correct, correct.
Yeah, P2P we will pay. Here we will collect it from the customer.
Okay, okay, no doubt.
I think your voice is
Hello.
not clear. Can you come again?
Now,
Yeah, now better.
okay. Then you can take it. I have no question now.
Okay, fine. Okay, fine. So this is the flow of entries for O2C. Okay. So now, so there are multiple ways that I can record my cash or receipt transaction. Okay. So when we are recording the receipt transaction, so I could directly receive it. So that is the above scenario that we talked about. Okay. But it is not that straightforward case always we will have. So let's assume that we are doing this uh, check transaction. Okay. So now in this case, what will happen is that first, when I create the receipt, so I will have my cash account debited and have my unapplied receipt on the credit side. Okay. So now why do I have unapplied receipt? So what is the meaning of unapplied receipt? So meaning that I have received the amount, okay, but then I am not sure exactly who's the customer against who I might want to create this receipt, okay, because I received in so all these receipt transactions in the AR module, so that we will create based on the bank statement that we have received. Okay, because we have basically invoiced customer and customer is going to pay on the due date. So which we will get notified from the bank statement and basis the bank statement, we are going to create the receipt. So now most of the cases we will know that this is the customer that we have received from. So in an odd scenario, let's say I don't know the customer. So which I might want to inquire my front office team and then book these transactions. Okay. So now, in this case, my cash will be debited and my unapplied receipt will be credited because I don't know against which customer I wanted to apply this particular transaction. Okay. So now let's say I have received the information from front office and they have said that it is so and so supplier. Let's say ABC customer is the party name which we have received. Okay. So now in this case, what will happen? I have basically sorry, this is unidentified. Unidentified. So now, in this case, I have identified the customer. Identified. My unidentified would be on the debit side and the unapplied cash. So this would be on the credit side. Okay. Which means that I have identified the customer, but then I exactly don't know against which invoice I must apply this particular receipt that I have received from the customer. Okay, so now let's say again for this, I'll go back to the front office and get this information. So which means that against 948 is the invoice number, so which I might want to apply this receipt. Okay, so now since I have identified this also, so I'll say this is my receivable. Okay, right. Unapplied is the debit and receivable will be credit. Okay, so in this case, I have identified and applied. Okay, so now if you see here, so this is again the temporary account. So what are the temporary accounts? So this is my temporary account, and this is my temporary account, and this is my temporary account. So which means that cash to receivables. Okay, so this would be our actual transaction if you see. So if I don't have a bank and these things involved. Okay, again here we have different methods. I have direct, and also I have the standard. Standard as the factoring. So factoring, we will not use it much of it, but as an option we have. So I'll just explain later what is factoring. Okay, so direct meaning that I will not need bank statement to reconcile this particular receipt, meaning that this is my cash transaction. Okay, already I have received it. So I can directly book my cash as debit. I don't need the cash clearing account created. But in case of standard, I will have to do this remittance. So now what is remittance? In case of check, so I have received the check as an instrument. So I'm saying this is my first transaction. So now I'll go to bank and then I'll basically deposit and do all those process. So this is called remittance. And then we have clearance. So these are the three steps in case of standard receipt creation. I have received the instrument, I have deposited in the bank, and bank has cleared. So this is how I will find through my bank statement. Okay, so this is the process. And then finally the factoring. The factoring is kind of a short-term loan that we will basically do. So this will not be applicable for India scenario. So if I'm right, so it is mostly for US and Europe, some part of Europe countries that follows this thing, wherein I can surrender my receipt and I can get my loan, which means that I have sold so and so amount. So this is for the short-term loan that I can do. So what will happen is that so I will surrender the receipt and the bank is going to give, let's say, short-term loan of, so this is, so the bill amount is 1 lakh. The bank is not going to give the entire 1 lakh. So let's say it is partial. So 50,000. So 50,000 is the short-term loan that I received from bank. So now the due date has received and bank has received, let's say, 1 lakh rupees. So now bank will give me or deposit 50,000 in my bank account and the settlement process will be completed. So which means that already I have received 50,000 as a short-term loan, and then the on the due date I am receiving the remaining amount. Okay, so this is about the factoring. So which is mostly used in the other countries, but not in India, Middle East, or these South Asian countries. Okay, so this is all about the O2C processes. Okay, okay. So if we are with this, probably I can go to the asset accounting entries, and we will see that also.
In O2C.
No, not in O2C. So O2C, that's it. We don't have anything else other than this.
Okay. So fixed asset you are saying now.
Yeah, fixed asset because fixed asset is part of uh, P2P. So it's not actually part of it since we are covering the asset part of transaction there, the furniture and the other examples that I have given. So I'll cover the accounting entries in the fixed asset module also.
Okay.
So now the first accounting entry that we will have in the asset module is that firstly the asset transaction. So asset transaction, as I said, so if we are creating here, so there are multiple ways that I can create the asset transaction. Okay. So in this case, what I can do is that I can say asset cost account and asset clearing account on the credit side. So in this case, we are talking about the PO-based asset creation. Okay. We also have invoice-based asset creation because it is not that always we will have. So this is the best practice to follow, but there are certain companies which will follow this as well. That is to create the asset transaction from the invoicing. Okay. So now in this case, what will happen? So asset clearing would be my debit account, and then I will have my liability. So the payment and the other parts we have already seen it. So that will get knocked off, which means the liability will be get knocked off from the payment entry, but then this clearing account will be knocked off here. Okay. So this is for the invoice based. So apart from this, we also have option to create asset in fixed asset module manually. So in this case, again, this is the accounting entry that system will generate. So now, about the two cases, if you see, so the clearing account is basically knocked off through other transactions. But in this case, we will have to generate the clearing account, the knockoff entry by the system. Okay. So for this reason, usually we will not suggest to create the manual assets. The reason being, if I'm creating the assets manually here in the fixed asset module, so I will not know exactly against which purchase order or which invoice or who is the supplier. All those information I will not be able to record it. So for that reason, so usually we will suggest to record the asset transaction through purchase order, if not through invoice. Okay. So this is first transaction that we will do in the system. So now, let's say I have created this asset in the system. So periodically, I will have to create the depreciation in the system. So now, before this, what is depreciation? So let's say my asset cost is 10,000. Okay, so this I'm going to use it for 12 months. Okay, 12 months. Okay, and you will have the depreciation percentage that is defined for each assets. Okay, so let's say for this case, the depreciation percent is 25. Okay, so 25% is what we wanted to generate. Okay, so instead of 12 months for the purpose of simplification, so let me call this as 4. 4 months is the duration that I'm going to use this. So month on month. So let's say I purchase this in the month of January. So January would be my first period. So February would be second, March third, and April would be fourth. So this is the time that I will retire because more than this, I will not be able to use this particular asset. Why I cannot use it? Because initially it is 10,000. So now I'm going to say this is 2,500 is the depreciation. So now the value of this particular asset is 7,500. So now if I sell this particular asset, I can sell it for 7,500. Now the second period again 2,500. So that now this becomes 5,000. The sellable price is what we are saying it as value of the asset. Okay, so again you have this. This case it is 2,500 and here it is 0. So now April, beyond April, I'll not be able to use this particular product because the life of this asset is only 4 months. Okay, so usually it is at least 4 years, 5 years, or at least 3 years. But just for understanding, we are saying it is 4 months. Okay, so now End of April, I'll have this asset value as zero. So more than this, longer than this, I will not basically use this particular asset. So what I will do is that, so I'll say this is retired. Retire this asset. So if I could sell it for a better price, so probably I can sell it, or I can sell it as scrap, which means that not going to recognize the revenue of this thing. But let's say I am selling this in my second month, that is in the month of February. So I can sell it for 5,000. So now let's say I have market situations that this have increased the price of this particular asset. So now let's say this has increased to 12,000. Okay. So now if I retire this particular product, so for me the profit is based on my purchase price. So my purchase price is basically 10,000. But then if I sell this particular product, I am gaining 2,000. So my gain would be 2,000 in this case. Okay, so this is the retire profit. So now this 2,500, 2,500. So this is what we are referring to the depreciation. Okay. So now for this, what is the accounting entry that system will generate? So this would be depreciation, expenses debit, and deferred are the accumulated. Deferred is not the exact word, it is the accumulated depreciation credit. Okay, so now you have two kind of depreciation here. So one is that you will see YTD depreciation, and then you will have the depreciation reserve. YTD depreciation is for this particular year, that is understandable. So let's say in this year I have generated I have created depreciation for 5,000. But then this particular asset that I'm using, so this is I'm using for past 3 years. So now, which means that depreciation reserve would be 15,000. But then YTD, if I look at it, it is 5,000. So now where you will find this YTD? So YTD you will find it at the asset details. So there's a section where you can refer the assets. So there you will find the YTD and the depreciation reserve. But in terms of accounting, you will have the accumulated depreciation, nothing but the 15,000. Okay, so 15,000 would be your credit and 2,500 would be your debit. Okay, so in terms of asset details and things, but if you refer this particular transaction, you will have 2,500 debits and accumulated depreciation 2,500 credit. So now this 2,500 is going to get accumulated to this amount, saying 15,000. Okay, so this is for the depreciation accounting entry generation. Okay, so now there are scenarios wherein we will adjust this particular transaction. Okay, because let's say I wanted to make this life adjustments. Okay, so now if I'm making life adjustments, let's say this I have created it for 10 years. So let's say life I have booked this for 10 years. Okay, so now I wanted to basically book the expenses and then do the adjustment. Okay, so now in this case, how my adjustment or the adjustment whatever that I have made. So this will look like. So if I'm doing expense adjustment, so this is going to say my depreciation depreciation expense will be still debit. So let's say this is for 2,500 or let's say 2,500. Okay. So now since I'm changing this period from 10 years to 9 years, so already I have calculated or I have recorded depreciation more than what has to be calculated. Okay, so which means that 500 is what extra I have calculated. So now I will have to reverse this 500. So what I will do is that I'll say accumulated depreciation on the debit side as 500. Okay. And then I'll have the adjustment depreciation expenses. So this should be my actual depreciation. Okay, so this would be my depreciation expenses. So now if you look at it, so this 500 is reduced and the actual depreciation is brought to place. So this is for the adjustment. So it's not limited only to the life of the asset. So it is more often classified as financial adjustment and non-financial adjustment. So if you are talking about financial adjustment, it is about the reducing the life of the asset or changing the depreciation method or adjusting the cost of the asset. So there are multiple ways that we can do. So what is non-financial adjustment? It is the category change. So category is nothing but if this is furniture. So we will have two things. One is major and the other one is minor. So my major would be furniture and my minor would be this table, whatever that is. Okay, so this is higher level classification and this is lower level classification. Okay, so this is my major and my minor categories. So now, if I want to change it from furniture, let's say this is an IT by mistake, IT and computer. So by mistake, I have categorized this as furniture. So I can change it. So this is non-financial changes because this is not going to impact anything. So I'm just reclassifying the category, the correct category. So that's all about it. Okay. So apart from this, so we have the retirement and reinstatement. So retirement visa, what is that retirement? Meaning that if I want to record the retirement, so I can record it. So now, what would be the accounting entry if I am basically retiring this particular asset? Okay. So now, in this case, what will happen? So my accumulated depreciation would be debited because I am reversing this depreciation and or probably whatever the amount that I have generated. So this amount will be reversed and the asset will be sold. Okay. So now the second line, the second debit item, what I will have is proceed of sale. Sorry, proceed of sale clearing. Proceed of sale, we will have it at this level. What do you call it? The credit item, which is gain or loss calculation. The proceed of sale is nothing but your actual sales price. Okay. And then we have the cost of removal. Cost of removal, gain or loss. So now what is cost of removal? Cost of removal meaning that I'm selling this asset. So if let's say customer has picked this particular asset from the site and he has paid the amount. So which means that I will not have any cost of removal in this case. So it would be zero. But let's say instead of customer coming to site and picking the item, so I am doing the transportation and uh, I'm taking care of the transportation charges. So in this case, whatever the freight charges that I'm paying, so this would be my cost of removal, the movement and the other cost involved to this particular asset sale. So that is my cost of removal. Okay. And then I will have the net book value. So what is the actual value of this particular asset? Okay. So now let's say I have gained amount of 500. So in the case of 2500, I'm just taking this as 500. Okay. So now I will have the asset cost account. So sorry, this thing is put that. Okay. So now if you see here, so I have basically added this as the debit item. So now when I'm retiring or when I'm selling this, so this cost, whatever I have, so this will be reversed, which means I will see at the credit side. Okay. So this would be my asset cost. So similarly, you will have to capture the proceed of sale, the sales gain or loss. So let's say this is my gain. I did not incur any loss in this. So this is gain to me. So I'll have this at my credit side. Okay. So similarly, cost of removal, clearing account. So now why are we having this clearing account? Because we have these subsequent transactions that we might want to create in the system. Okay. So that is the reason we are creating this accounts. Okay. Now we have created these transactions. Okay. So now in terms of expenses, I'll have to book in the AP module. So AP module, so I will have my clearing account. So let's say this involves the freight charges. So what I will do is that, so I'll debit my cost of removal clearing. So this will be my debit line. So then similarly, we will have the liability account and then the other processes, we have seen already. So now this is at the AP end. So at the AR end, what will happen is that, so I will have the cash receipt. So let's say cash receipt is debit and we will have the proceed of sales at the credit side. Okay, clearing account. So now if you knock off this, so this is on the credit side. Similarly, this is on the debit side. So this got knocked off. So similarly, this is on the debit side, and here if you see, so this is on the credit side. So this will get knocked off. So now the net account that if you see, so I have received the cash for the the gain, whatever the gain that I have made. So for this, I have received so and so amount in cash. So this is my gain account. So this is my profit out of this particular asset sales. So since we are talking about the pricing at the 12,000 rupees, so we are talking about the gain. But then if I'm selling at this price, so I'll not have gain. So which means that will be zero. I'll not have any proceed of gain or cost of removal, anything I will not have. So these items basically I'll not even have this in the list. I'll have accumulated depreciation, net book gain, asset cost. Okay, so these are the items that I will have in my accounting entry. So this is about the asset addition and then the asset adjustment and then the retirement, all these process in the asset module. Okay. Okay. Any question till this point?
No, fine. Later I will ask. Okay. We'll do on
Okay.
instance now. Then that time will be more clear when we will do on
Okay.
instance.
Okay.
Yeah.
Okay. Fine. In terms of flow, this is all I had. So apart from that, theoretically, we have already spoken about the things. Okay. So probably I'll explain the even the payment processing I have explained. So probably the supplier and the other details we might need the instance. Okay. So any idea when you'll get the instance?
I will let you know once I got the information now. Okay.
Yeah, because I have plan at 4 o'clock. So probably if you get that before 4, maybe we can connect.
Say 4 o'clock. Okay.
Yeah. Okay.
Okay. We'll check and let you know.
Okay. Okay.
Yeah.
Okay. Okay. Thank you.
Thank you. Bye.
Right.